The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, let's talk about these grain and livestock markets as a whole as we are getting into the month of May. Spring planting is ongoing in many areas. Well, unless you've had rain here the last few days. Maybe you got a little bit of a slowdown to that planting progress, but overall, it is that time of year, and it's time for us to catch up again with Chad Hart from Iowa State University. Chad, welcome back to Market Talk. Thank you for joining us once again. How are you, sir?
I'm doing well. I'm glad to be here.
Well, as I kind of alluded to there, rain may be slowing down some planting progress for some folks here the last few days, Chad. I know Iowa's gotten their fair share of rain and a lot of areas throughout the Corn Belt, severe weather too, unfortunately. But so far, it seems like spring's been moving along well. And I know this is kind of that time of year where we get planting, and really these markets, especially the grains, kind of become a weather market, don't they, Chad?
They definitely do, and especially the action we've seen over this past week. The idea is that crop progress report comes out, on Mondays. We saw that, across the nation, corn, soybean plantings running a little bit ahead of usual. Normally, that would put some downward pressure on prices, but hey, the rains come in, as you mentioned, the severe weather. The likelihood that that's going to slow us down and maybe drop us from above average to below average in terms of plantings by the time we get to next Monday, and you get a little pop in the market. We do tend to try to build in a weather premium around this time of year because, we know that, the planting does need to go in, but we also know that the later that planting is, the more likely we might have some problems with the crop down the road.
Yeah, and that's kind of the big key here. And I know looking at some of the forecasts and whatnot, it sounds like that we're going to continue to have an active pattern, maybe some windows to dodge around that here. But realistically, the calendar, I'd say more of the worry will probably start to really come into this market here by the second half of the month of May, towards the end of the month, Chad, if we continue to have delays, right?
Oh, yeah. That's definitely the case. I mean, the rain is both a blessing and a curse right now. A lot of the country, let's face it, even here in Iowa, we're like, no, bring on the moisture. We're, healing up from the drought conditions we've suffered over the last couple of years. At the same time, too, you want to get in the fields. And so, as you say, we'll be able to hit those windows. And I always remind my students when we're in class talking about this is that when you look at the data from a nationwide perspective, all we need is one good week. And within one good week, we can plant roughly half the nation's corn and soybeans. And we've seen that over and over again over the years. So, we're starting to see that worry build in and help put in a little bit of a weather premium right now. But the real risk comes as we get past May 15th. And as you say, that second half of May, if we're still having problems then we really start to build in a significant premium.
Well, I know you do a lot of work and look at history and more as you talk with your students there and your economist hat. I mean, seasonality here too in these grain markets. I mean, typically, don't we kind of tend to put a rally in here from, say, May to June, July timeframe here, especially quart of beans, Chad?
Oh, yeah. The idea is that we tend to see our highest seasonal price of the year between Mother's Day and Father's Day. So that's the deal. What we're relying upon is the idea that it is in the planting window, and we do see us traditionally build in some sort of weather premium, whether it's from being too wet or too dry. It's never that Goldilocks moment. So it helps build the market up at this time of year. It's also the case of we don't see a lot of farmers selling at this time. So what you see is sort of reduced supply available right now. That helps heighten prices. And that's why that seasonal pricing pattern does tend to work out year after year after year.
Well, a lot of factors at play here too, beyond the weather that, of course, we got to think about. And I want to talk demand with you a little bit. Corn demand continues to run well above USDA's target pace as far as exports. And so it feels like corn looks good. Soybeans, though, have been pretty drag here, Chad.
They have, and it's been mainly an export problem. I mean, when you're looking at domestic crush, it's good, and USDA's factored in some growth there, and we seem to be meeting that. But yeah, our export sales have been disappointing this year. And when you look at sort of where the holes are in terms of those international customers, the big one here is China. I mean, we see a gigantic hole there. A lot of that probably still has to do with the idea of that we come out of the phase one trade deal, and China is now free to basically buy their beans anywhere in the world. And let's face it, South America has had a little bit of a price discount compared to us over the past year, and so we've seen a lot of those sales that we had from China, say 1 and 2 years ago, they're now moved down to South America.
Well, another aspect too, and I know we got the sustainable aviation fuel tax credit guidance out here this past week, and largely, I don't know, both sides of the coin here as far as the reaction. A lot of folks saying it's a good baseline, it's good groundwork. Some saying that it disqualifies farmers in certain regions of the country. I mean, I don't know how much you've looked at that, but I know that's SAF has been talked about as such a huge opportunity for demand. I still say it's there, but I wonder, it feels like we might have a little more ground to cover here in terms of tax credit guidance and regulation, et cetera here, right, Chad?
Well, we definitely do, and I'll describe it as it's that glass that's half full and half empty,
Hmm.
depending on how you want to look at it. It's all right. I'll establish it as I think a lot of us in ag worried that the door would be closed. The idea is that we wouldn't be able to see a pathway to get, say, corn-based ethanol into SAF. On the other hand, I think there were other folks that were thinking everything's going to qualify. Well, this is sort of that halfway in between step. We do see the pathway for corn, and right now it is a very limited pathway, but at least there's one already established there. Now the question is, can we get more established as we move forward over time? And that's why you've seen a lot of the ag groups talk about, yeah, Greek got updated, that's helpful, and we need to continue to update these models. That will open up more pathways for ag to fully participate in the SAF program.
Well, and one that was a bit of a head scratcher to me as well that I've followed with this whole situation is that we're in I think it's LanzaJet importing Brazilian sugarcane ethanol, which qualifies already for sustainable aviation fuel. And, seeing something like that where we're importing Brazilian sugarcane ethanol, yet leaving that pathway a little tough for corn, just kind of a head scratcher there, Chad.
I'm going to argue we've had it before, though. Take you all the way back to 2005, 2007, when we first established the renewable fuel standard.
Mm-hmm.
When you looked within that standard, there was a carve out for basically 4 types of biofuels. And oftentimes we only talk about 2 of them, the cellulosic one and then the conventional, which became corn ethanol basically.
Mm-hmm.
But there was this idea of additional advanced biofuels in that, which was mainly filled by sugarcane-based ethanol from Brazil. So we have seen something like this before. I think what is different about the situation we're talking about now with SAF is talking about, okay, what is the carbon intensity of actually shipping that carbon all the way, or that fuel all the way up here from Brazil versus our ability to produce, and weighing that relative footprint. So it is sort of this debate of, when do you count the carbon against you and when don't you? And I think that's the big debate that's, let's call it, governments across the board are having right now. How do we recognize what's happening internally to our country versus allowing this global trade for these carbon aspects as well?
I appreciate the perspective on that. That's I didn't think about it that way. So thank you for that. Chad Hart with Iowa State University joining us here today on the show. Chad, let's just to kind of wrap up the grains here quick. Obviously, end of the month, new month, you get some of that volatility in there too. Stock markets, outside markets have played a role here as well. Wheat has kind of been the leader here to some degree, and kind of stalling out a little bit, though. I guess to kind of wrap up the grains here, what really needs to happen the next few weeks ahead? Does the wheat-led rally need to continue here? Do we have to manage some risk and lock in some floors and puts and things like that here in this market to be safe, get your orders working, all that kind of stuff? I mean, what's your kind of summation of what we need to watch for the next few weeks in grains?
Well, that's the deal. I think, we are looking to see, can we keep this rally going? And you're right. Lead has definitely led the charge over the past 3, 4 weeks here. But it's also the case in point that I don't think it's got a lot of gas left in the tank either. And so we're going to need some additional positive news to help sustain this rally. And I think it's crucial to sustain it because, especially, let's look at the corn market, for example. We've been hitting right now, we're near the top of our, those resistance levels. And so we keep slapping against them, but we haven't been able to punch through. So that's the deal. Do we see enough of a slowdown here in planting, or do we see enough of an export kick helping, push us on the demand side? Or maybe it is ethanol's been running a little hotter than USDA's number shows. So is that enough to help push us through that resistance level to maintain where we're at right now? But to me, it's a case of we've got a little bit of a rally going. We're off some of the lows that we saw, especially on the crop side, say 2 months ago. So if you did want to put in some pricing protection right now, maybe establish some price floors, yeah, now could be an okay time to do that. You're not necessarily locking in the price if you do it, say, through a put option. So you're leaving yourself some upside potential, but you are protecting yourself just in case. Hey, if we are able to plant again and plant like we want to, we know we can catch up very quickly.
Chad, let's talk some livestock trade real quick. Speaking of positive news, man, oh man, this cattle market has been all over the place with news headlines and a lot of negative. One positive this week was that ground beef tested did not have traces of the bird flu in it. That helped out the cattle market. But largely, I mean, you got two segments here. I felt like in the cattle trade, cash is on one side, doing its thing. Doesn't seem like it's that affected. And then futures super affected by the news headlines. And it's just a lot of volatility, right, Chad?
Definitely a lot of volatility. And I think it's, if you want to think of it this way, the cash side of the market is just looking to move the meat through the marketing chain. When I'm looking at futures, it's all about perceptions and where do we think we go from here. And that's why you saw the futures react dramatically to the storylines about, the avian influenza problems. At the same time, too, the cash market really didn't move that much. Nope. These animals were going to the market anyway. Let's get them through. So I think as we learn more about how avian influenza is moving through the system, and as we become more comfortable in understanding that should help settle down some of that volatility. But I think we're going to go through a little bit more here because we don't fully understand all the pathways that virus is moving around.
Yeah, no, very true. And I think hogs too have been influenced to some degree. I think more so watching to see what pork demand could look like here this summer, if anything. And, hog futures have gotten kind of to the top of their range, it feels like here, needing something else to either push it higher or we're going to stall out here, it feels like, Chad.
Yeah, that's the deal. It does feel like, sort of like I mentioned with corn, we've been hitting some resistance levels here. It has, hogs have been on a pretty good run when we look over the course of the year. But you're right, we have hit this point where we just can't seem to bust through. And again, we're looking for that one piece of positive news. I've been watching the export markets to see if they can provide another spark there. The data over the past few weeks has been good, but not anything that would necessarily take us to that next level. And as you mentioned, domestic demand, it's more a case of trying to figure out, okay, what's avian influenza doing to the beef side? Do we see any transition back to pork because of that? And we haven't really yet.
Chad, great stuff as always. Final thoughts as we wrap up our conversation today. Anything else you want to mention or reiterate to farmers and ranchers listening in today?
Well, the other thing I think we'll watch, and talk about positive developments here. We are seeing the U.S. Congress start to get their act together on discussing a farm bill. It was good to see the proposals come out from both the House and Senate. Now, I'm going to warn folks that it's just the start of this process, but at least we've got now some some legislative language to look at so we can see where they want to go from here. Now it's a question of, can they put basically those packages together with a budget that makes sense and pass it across both houses of Congress as we move forward.
And that's going to be a big thing to watch in the months ahead. Of course, presidential election in front of us. Can we get something done before we have to extend the 2018 legislation again? It's a lot of things in front of us, but I agree with you, Chad. Nice to see that we're getting some advancement here in terms of a new farm bill. So I appreciate it as always. Thank you for joining us again, Chad Hart, Iowa State University. We will talk to you again soon, Chad. Appreciate it.
Thank you.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.